Hey everyone, it's Jared with Exponential Wealth. If you're new here, welcome. If you're not, welcome back. We just want to thank you for taking the time to be here and join us to learn more about investing, trading, or just building your wealth in general. If you do find this video helpful or find any value in it, go ahead and smash that like button down below to show your support, and it would be much appreciated. So without taking too much more of your time, let's get to the video. So today's video was a video that was requested by a lot of people in the Facebook group. And I've also been getting messages on people asking to make a video on this. So here it is. So this is going to focus on charting, basic technical analysis, what to look for in a chart. Let's say you are a beginner investor, and you're just looking at a chart and you're like, I have no idea what I'm looking at. I just see a bunch of colors and squares and lines. Um, so this video, hopefully, you learned something new. If you have any questions, feel free to comment in the comment section, or hit us up on Instagram or join the Facebook group and start a discussion. Okay. So before I even start, I just want to preface this whole presentation on the fact that the stock market and what you see on a chart is based on supply and demand, and it is based on two types of people for the most part. Those who think the stock is going to increase in value, aka these are called the bulls, and decrease in value when they think the stock is too high, and these are called the bears. Now, pretty much what you see on a chart is literally a tug of war between these two entities, and you have people in the middle who are, indecisive, I guess. And I want to drill this idea in your head. Think of, two sides. Think of tug of war. Think of balance and imbalance, okay? And I've put this picture in this presentation more than once because I really do want to get this idea drilled into your heads. Okay, so knowing the difference of the analysis that is out there, there's fundamental analysis, which is basically companies' financials, market evaluations, future growth, future earnings, relative to its current price. This is optimal for the long-term investor, as these numbers, these earnings, the revenue, it all plays a part in the long run. Now, technical analysis. This is analysis based on the price action of a given stock that focuses on the levels or price at which supply and demand levels are located. Like I said, with the tug of war, right, you're going to have one side pull because they have strength. The other side will pull because they have strength. This will oscillate. So price will oscillate between levels of supply and demand, creating balance and imbalance between one another. And this is what you see in a chart, just visualized into data and candlesticks and lines, right? So technical analysis is optimal for the short to midterm investing or arbitrage. More or less, that is what trading is based off of. As an investor, people will say, no, you should just be a fundamental analyst, right? And then other people will be like, no, you need to be just a technical analyst. Now that I see both sides, in my opinion, I think the best way to be the best investor you can be is to learn both, right? You need to know the company you are investing in. You also need to know technical analysis because you need to know if you are getting in at a good price. You need to know if the price you're getting at is too high and maybe you could wait for a lower price, right? So there's benefits to both, in which I think to be the best investor you can be, you need to be both. Okay, so most beginners start on Robinhood, and I, 11 out of 10 would not recommend this, just because Robinhood is very simplified. It's easy. It's great for the beginner, but the data is limited, and data in the markets is your best friend. So the next best thing I would recommend is probably Webull. They actually have a charting feature on their platform, both the phone and the like desktop, internet um, website type of deal. You have other platforms such as Tastyworks, very good for options trading, and you have places like Thinkorswim by TD Ameritrade. It's free. You just have to deposit $500 to get real-time data, and they have a lot of data, and that's actually what I use. There are others out there. I'll make a video on the different types of brokerages if you guys want, but I'm just putting those as an example. Also, online, there is a website called TradingView. This is an amazing website that provides charting analysis that you could charting that you could use for your analysis. They have both paid and free. Okay, so the most popular type of charting that you will see is candlestick charts. Excuse me. Okay, so a candlestick is basically a way of representing price history, right? Where has price been? Where is it at now? And where has it opened and where has it closed? So on the left you see a red candle. You're going to see this is where price opened up. So let's pretend this is a day. Each candlestick has a certain time frame that it covers. So for this example, let's pretend this is a daily candle. So that means that the day started off at this price, then the price came down or came up depending on, what happened during the day, but it ended up closing below the opening price, which makes it a red candle. These wicks right here is basically where price, it's basically like history. It's price history. That's where price was, but is not currently there anymore. So at the top, this candle could have actually been green, right? It opened up here, came up to this high price. It would have been green because the price is higher than the open price, but then at the end of the day came down. And same with the green candle, just opposite. So you have the opening price down here and the candle finished off above the open price, which makes it a green candle. You will see these candlesticks called doji candles. That's DOJI. They basically look like a big cross. They're either white or pink or whatever color you set them to, but that means that the closing price and the opening price are very close together. Okay, so what do you look at first? So I want you to focus on the overall trend, right? There's a quote that says, the trend is your friend until it's not. Okay, so what is an uptrend? An uptrend is defined as higher highs and higher lows, as you could see in this staircase right here. On the other side, you have a downtrend, which is defined as lower highs and lower lows, as a descending staircase. You have these two trends, but you also have a third trend, which is a range-bound trend or a sideways trend. And as you can see on the right here, you have the highs relatively the same and the lows relatively the same. Now, you can argue, you can be like, oh, but this low right here and this low right here, this low is lower than this one, so technically it's a downtrend. Like, yes, but you want to look at the overall, like, general trend, right? And what's the general trend? There is no specific trend in this example that will show you if it's an uptrend or a downtrend. Now, I want to bring to your attention the whole tug of war, right? So you have an uptrend. That means the bulls, the people who think price is going to go up, they're buying, they're creating demand. They're stronger than the bears, right? So that's what creates an uptrend. On the other side, you have the bears taking control. The bears are stronger than the bulls, which create a downtrend. And like I said, you will have a lot of balance in terms of saying that the bulls and the bears, their strength is the same, which creates a sideways market, or also known as a consolidation market. So here's a real life example of a chart. I don't remember what ticker this is, so bear with me, but it still makes a good example. Here I ask you what the trend is. So you're going to have a high, a low, a high, a low. I forgot to put the line. A high, a low. So overall, the trend is down, right? So bears are in control here. Now, with this big yellow circle, this is a very critical part in the chart because this is where the trend changes. And this is where the bulls actually take control and step in, right? And what happens? You have a low, a higher low, and a higher high. Now bears took control again, and then killed their trend, right? So it's basically a battle back and forth. Okay, so you want to identify the purpose of your trade, right? You want to have purpose when you invest in the market, so you're going to get eaten alive out there and lose a lot of money. So before you enter a trade, you must have a plan. What is your purpose for your trade? Are you going to day trade this, right? That means buy and sell on the same day. Are you going to swing trade this? Am I going to hold it overnight, longer, a couple days, a few weeks, a couple months, right? Or am I going to invest in this long term? 6 or more months, 2 years, 3 years, 10 years. You want to focus on your time frames depending on your plan, right? So if I'm going to invest in Tesla, for the next 10 years, why would I be looking at the 1 minute chart? It doesn't make sense. That's just a bunch of noise, right? So you want to focus on the time frame that suits your trading plan. So this is where you start forming your thesis and your market bias, right? And when I say market bias, I know people don't like to be biased. People say don't be biased, but in this case, it just means what is your market bias? Are you a bear? Are you a bull, right? And the thing is with the stock market, and it's a very great statement that I want to share with everybody, and it is a statement that it is okay to be wrong, but it is not okay to stay wrong. If my bias is that Tesla is way too expensive, I'm not just going to go out there and short Tesla if the trend and the bulls are in control, right? If the bulls are in control of Tesla and it's trending up, I can't be a bear and be like, I'm going to short this stock, because you have to go with the trend. Do not fight the trend. You can trade and invest like against the trend, but you have to be a very skilled and experienced trader. So as a beginner, I would advise you not to. Okay, so here's a picture again. Oh, by the way, if you have an Instagram, we will be posting a lot of Instagram pictures and infographics, just to give you a daily reminder, or just information that you might need in the future. So if you do have an Instagram, follow us. Our handle is at the bottom, so it's a shameless plug. But yeah, okay, anyways. So supply and demand. Think of the picture, think of the tug of war. So now you're going to have support and resistance levels. So a support level is a level in which price does not want to move below. So think of this as a floor, or in more advanced terms, think of this as a supply zone. Next, you have a resistance. This is a level at which price does not want to move above, and think of this as a ceiling. Or in more advanced terms, think of this as a demand zone. Okay, so I just wanted to put this disclaimer out there that these levels, these support and resistance lines, these are not clear cut, right? They are more like zones, so don't take it um, as a exact level. Think of it as a range, and I'll show you this actually right now. So if we look at this stock right here, CLOV, so I drew a line right here. So like I said, a resistance level is a level at which price does not want to go above, right? So as you can see here, we came up, it did not want to go above this line. It tried again, and it actually came down, right? So it was a resistance level or a ceiling. Now, if you move to the right, you have the chart actually breaks through this level. And what happens with a level? If you have a resistance level that is broken, it now acts as support, and vice versa. If you have a support level and it breaks down and it breaks through the floor, it now becomes resistance. So in this case, you have a resistance level, stock broke through, and now the resistance level became a support level, and it also created a new sorry guys a new resistance level up here. So another example that I will give you, so NEO, as you can see, stock was trending up. It came up to this line, to this price, right? And I will draw my resistance up here. Now this is a level at which price did not want to move above. As you can see, it came down, and it tried again, right? And it tried again, and it actually succeeded. And what happened this time? It broke through, it came down, and what was once resistance is now support. But as you can see, if I zoom in, look at these, look at this line and look at the candlesticks. It actually, peaked through the line, right? So as I said, these lines aren't clear cut, and if you want to be more accurate and more advanced, what you would want to do, so I'm going to remove the drawing, and I'm going to use my drawing tool, and I'm going to use a box or a rectangle, and this is more of a zone, right? So it's not like a stock is going to hit a certain price and then all of a sudden reverse, right? So as you can see, came up to this resistance level, came down, came up, became support. So now we're holding this level up here. Okay, so now back to the presentation. So now we have indicators and studies, and I'm sure some of you guys have heard what indicators and studies do. As you can see in my charts, I have a lot. That's what all these colors are. To define indicators and studies, this is basically data and price history that is consolidated and organized so that one may better visualize what is actually happening rather than just seeing a bunch of numbers, right? So as you can see, these lines right here, these are called moving averages, right? So they take the closing price of the last however many days I set it at. So for example, this one right here, it is 8. So it takes the last 8 days closing price and it creates an average and it creates the price. It represents it as a price, which creates a line. So that's an average, right? Now you have my volume at the bottom, green meaning that we closed green, so green candlestick, red meaning we closed red that day. Well, I'm on the daily chart, so it means that day. You have This down here, it's called the on balance volume. This basically means how much volume is coming in and out of the stock relative to the last day. So, this is all colorful. There's so many indicators and studies out there. You have to know which ones you think are most important to you, and actually which ones resonate with you the most, because there's so many out there that you can make money with all of it. But one thing I want to make one thing I want to make certain that you understand is that data in terms of indicators and studies are always a lagging indicator. I should have made this a slide in its own, but just remember that it's a lagging indicator. That means it won't tell the future, right? Data and analysis and all this stuff, it tells you what has happened in the past, and it gives you a visual representation. Now, this will help you predict as accurately as you can to create a thesis for what can happen in the future. But in terms of indicators and studies, right, these will only help you create a sort of a bias as to where you think the stock might go. So you should not rely on one sole indicator to be like, okay, RSI is up here, so I'm gonna buy. Like, that's not the smartest thing to do. So in this presentation, in this slide, I just reiterating what I said here. It's to be used only for a reason or a verification to confirm or deny your bias. Do not make a trade solely based on your indicators or a study. Some notable recommendations that I have are probably like simple moving averages, exponential moving averages, RSI, which is called the relative strength index, the stochastic RSI, volume, average volume, relative volume, standard deviation for those statistic math geeks out there like me. These help a lot in creating a thesis. But if you're not, so in tune with math, maybe not. Other helpful ones are the VWAP, which stands for the volume weighted average price, and Bollinger Bands. Okay, so just another warning here. Everyone likes a bunch of indicators. It makes your chart colorful, makes you look like you know what you're doing, right? But you have to be careful as a beginner. Too many indicators, too many studies will actually paralyze you in making a decision, right? And this is called analysis paralysis. So as a beginner, you want to keep it as basic as you can and as simple as you can, and then work up from there. So I'll make more videos on indicators and studies in the future, going into particular ones. But for now, I hope you found this video helpful, and thank you for watching.